First of all, Goldman worried about consumer spending. Why?
Well, you've got a Delta variant, you've got supply constraints, you've got all kinds of things going on, Sherry, that are not the kind of things, as our guest just said, that the Federal Reserve can control. No policymakers can control this, but the economy definitely gets hit by it. For GDP, 2021, they were looking for 5.7%. That's been just shaved a teeny bit lower to 5.6%. And next year, a bit more of a downgrade, 4.4% to 4.0%. But let me remind you, this will still be twice what the Fed sees as the economy's potential growth rate. And what they're looking at is the virus's continued drag on the kinds of services spending that are sensitive to the virus. So you can think of restaurants, you can think of going into a store and buying a new pair of shoes. And speaking of this, moving ahead to this week, retail sales will be out. They're expected to be down 0.3% in the month of September, but that's largely because there was a 6.7% drop in new car sales. Not because people don't want cars, but because there's a chip shortage. It's tough to find the new car you want. Inflation, though, let's look at this, because this is really the big focus for the U.S. this week when it comes to investors, when it comes to figuring out the Fed taper, because that 5.3% year over year on the CPI is supposed to be seen for a second month in a row. If we think about it, that's way high above the Fed's forecast. And how can we call it transitory when it keeps climbing? That's the question. Now, if we think about the Fed taper, let's pull up another chart, because I'm going to couple the inflation, looking now at the Fed's key measure, the core deflator in the PCE, and compare that with the unemployment rate. The unemployment rate tumbled. The same month, payrolls fell short, down to 4.8% from 5.2%. You almost never see a decline that big. And we're showing you again this number that is the above 4%, twice the Fed's 2% target now. This is why so many people think that the Fed is going to go ahead, announce a taper for November. They meet next on November 3rd. We get the meetings of the Fed September meeting this week as well, Heidi. That's expected to show, for all the comments they distill from the various FOMC members, we're ready to taper. And this is the sense they'll just wait a little bit longer. And, you know, we're looking at this, central banks around the world now, more and more, you know, the Fed's not the first one to get there. Look at the Bank of Korea, look at the RBNZ, saying we're going to start removing stimulus now. And as you know, on Friday, RBI, Reserve Bank of India, joined the club too. They said they didn't change their policy, but they completely stopped their bond purchase program. So there's something in the wind, and I would think call it inflation that isn't going away.